ULTY stands for the YieldMax Ultra ETF. It is a next-generation income-focused fund built on the popular synthetic income model pioneered by YieldMax. But what makes ULTY different from the other funds in the YieldMax family is one word: leverage. This ETF is designed to maximize yield by taking the high income strategy and turning it up to 11. The goal is to provide ultra-high cash flow through a single ticker by using a mix of options and aggressive allocation on top-performing stocks. It is intended for advanced investors who understand the trade-off between high income and net asset value erosion. As of now, ULTY is one of the newest synthetic income funds on the market. It was launched in the year 2024. The ETF pays dividends on a monthly basis and targets a yield that exceeds 20% annualized. That means if you invested $10,000 into this ETF, you could potentially earn more than $2,000 in cash income every single year, or roughly $160 to $180 per month, depending on the current options environment. The structure of ULTY is based on holding options positions rather than physical shares. This gives it flexibility and tax efficiency, but also makes it highly sensitive to the performance of its underlying strategies. The fund does not track a specific index or company like Tesla or Nvidia. Instead, it is a multi-asset covered call strategy. It can rotate its underlying exposure to whatever stocks or indexes produce the best premiums. The Ultra name refers to the intensity of the premium capture. It uses longer-dated options, more aggressive strike price targets, and occasionally mixes synthetic calls with tactical volatility exposure. That's what sets it apart from standard YieldMax funds. While funds like YieldMax and QDTE focus on income stability, ULTY focuses on income maximization, but that comes with a price. Because it is more aggressive, the price of the ETF can decline faster during down markets. Investors must be aware that the high yield is not free. It is being paid by giving up long-term upside. You are essentially trading long-term capital growth for high present cash flow. The main advantage of ULTY is for those who want to live off dividends right now: retirees, people on fixed income, or even dividend investors using margin strategies who want to build a paycheck ladder. If you invest in ULTY as part of a broader income portfolio, you can use it to anchor your high yield segment. For example, if you combined ULTY with more stable yield ETFs like JEPI or SPHD, you would balance the volatility and protect capital while still collecting high income. As of the most recent filings, ULTY has a distribution yield of over 20%. Its monthly dividends have ranged from 20 cents to 25 cents per share, depending on the option premiums. If you own 1,000 shares of ULTY, you could be earning 200. The biggest risk of ULTY is net asset value erosion. Since it constantly sells options for income, it misses out on major rallies. If the market goes up 10%, ULTY might only go up 3% or even stay flat. This is because call options cap the upside. And because it uses more aggressive call selling than the regular YieldMax funds, its net asset value can get eroded faster. That is the trade-off. You are accepting short-term income in exchange for long-term stagnation. This ETF works best in sideways or choppy markets. It underperforms during bull runs but provides massive cash flow when markets are uncertain. Another risk is the sustainability of the payout. If market volatility collapses, or if the option premiums decline due to lack of movement, the fund may lower its dividend. Investors should not assume the 20% yield is fixed. It is variable. It changes with the market. That is why you must monitor it monthly and adjust if the payout shifts. Let's wrap it up with my meter rating. Income is 5 out of 5. This is one of the highest paying ETFs in the market today. Monthly cash flow is exceptional. Risk is 4 out of 5. It is more volatile than most synthetic income ETFs due to its leverage and aggressive premium targeting. Sustainability is 3 out of 5. The yield is impressive but may not last forever if option markets change. Simplicity is 3 out of 5. This is not a beginner ETF. You should understand options, premium decay, and market direction before investing. Overall, my meter rating for ULTY is 4 out of 5. It is a strong weapon in the toolbox for high-yield investors, but should be used with caution. Think of it like a power tool. If you know what you're doing, it can build a beautiful income stream. If you do not, it can cause drawdowns you were not ready for. If you have any videos you'd like me to cover, say it in the comments below, and I will break it down in plain English.